Hello everyone. Welcome to a new edition of the webinar in collaboration between Debt for Climate and the Degrowth Masters at the Autonomous University of Barcelona. And today, our guest is Bineh Ndefru, and I will read her profile from the Real Project. Bineh Ndefru is a postdoctoral researcher at the Institute of Environmental Science and Technology of the Autonomous University of Barcelona. She has a degree in engineering and public policy from Carnegie Mellon University and a PhD in material science from University of California. Her research focus within the Real Project is to assess the likelihood of achieving decent living standards for all within decent living standards for all within ecological limits given different policy scenarios. Okay, so a lot of complexity here. And Bineh, I would like to ask you today to try to dumb it down a little bit for us and try to explain some of the fundamentals of structural adjustment plans, right? And let's get straight to it, right? So, Bineh, what are SAPs? What are structural adjustment plans, and who created them?
Yes, thank you for having me today. So, yes, structural adjustment programs are one of the things I study in my research at the Autonomous University. And these were programs of the International Monetary Fund, the IMF, and the World Bank. And I think many people these days know about these institutions, know that they provide loans and somehow keep countries of the global south in cycles of debt. But maybe people aren't as aware of exactly how they work and how like truly nefarious these programs have been. But in general, these international financial institutions, they claim to be supporting development and ending poverty through economic discipline, but like even just a cursory study of the impact of structural adjustment is quite the opposite, says quite the opposite. So structural adjustment programs essentially are a set of policies and conditions from the IMF and World Bank that they impose as requirements for countries that have received loans. And these essentially say, if you want to receive any more loans, you have to abide by certain rules, such certain rules that are the structural adjustment programs. So, for example, countries under structural adjustment had to do things like close local public banks, especially those that would finance industrial policy, which is like government assistance to fund specific activities like manufacturing. They had to do things like cut public spending on stuff like education and health. They forced governments to cut wages and cut jobs, and forced governments to privatize things that were formerly public services or state-owned enterprises, and then enhance the rights of foreign investors. Other things like remove price controls and state subsidies, which effectively increased prices and effectively lowered like the real wages of people, in addition to like the direct wage cuts. But and then they also were forced to do things like shift from growing food for providing locally to growing export crops, and in general just direct export of raw materials had to become a focus of the economy. And this was also trade liberalization, a whole long list of things, lifting restrictions on imports and exports. In general, it was all about prioritizing debt repayment over local development, and focusing on growth that would support this global market, or these countries would lose access to credit. So that was the basic idea behind structural adjustment programs.
And thank you. That's a very succinct explanation. And I used the wrong word. It's structural adjustment program. So thanks for the correction. Um, might be a good idea to step back a little and explain the creation of the International Monetary Fund and the World Bank, uh, just to understand the project here, because what I'm struggling a little bit is the contradiction between the intention and the effect, right? And how this happened, right? And why. So what was the initial project of the Bretton Woods institutions, which is the name that is given to the IMF and the World Bank, and how did structural adjustment programs serve this project?
Right. So the IMF and World Bank were established, as you said, at the Bretton Woods Conference in 1944. This is a conference of around like 40 nations initially. It was hosted in the US, and this was after World War II. So initially, these institutions had the goal of like rebuilding these war-ravaged economies of Europe, and stabilizing international currencies. And also, this was after the Great Depression, so it was about like preventing another Great Depression. So initially, the World Bank just sought to drive this like post-war recovery through loans, and the IMF oversaw the Bretton Woods system, which was a system of like a fixed exchange rate. We now exist under this like floating exchange rate of currencies, but at that time there was a fixed exchange rate of the dollar that was pegged to ounces of gold. And then other currencies around the world were then pegged to the dollar. But after a few decades, this system collapsed when the US printed more dollars than it could back in gold. And so then at
Okay,
that
so
point,
can I stop you there because we jumped the timeline a little bit there, right? So
yeah.
are you talking about the oil crisis in the late 70s because of the revolution in Iran? Is this
That was definitely a part of it. Yeah. So, um, yeah, I guess I was just going from like, yeah, the initial goal of it was like this post World War II recovery.
right?
And then, there was uh, the effects of like the oil crisis in the 70s for sure, wherein they had to, there was the OPEC nations um,
Oh,
that caused that, basically stopped delivering oil to the US, contributed to this oil crisis, and this yeah, costs became prohibitive, and countries, US, raised interest rates, and countries had to uh, borrow extensively basically at that time. And for countries in the global south, that meant um, there was like a lower demand for African exports. And so they were also losing revenue in the South and unable to like pay their debts, or limiting their revenue and their ability to pay debts and stuff. So there was a whole confluence of things. This was like a worldwide event happening there. But then at that point, the uh, the IMF shifted gears from like, being this overseeing this Bretton Woods system, which no longer existed. And they started to provide policy advice and loans to countries that were facing these difficulties of balance of payments or struggling with international debts. And similarly, the World Bank stopped focusing on loans that were focused on like World War II rebuilding, and instead focused on like poverty reduction and long-term economic development is kind of what their remit changed to. But a major part of this like shift in this agenda for both organizations became like this imposed austerity of structural adjustment programs. So they essentially changed from like stabilizing currencies and rebuilding economies of the North to promoting this like neoliberal market reforms and globalizing the financial markets through these structural adjustments. And like the indirect effect of that is that like the sovereignty of these nations, many of whom were just becoming um, free from colonial rule in the 60s and 70s, the sovereignty of nations then gets subordinated to global markets and global capitalism and these international financial institutions. Um, and so basically undermining the freedom of the newly free countries. Yeah.
Okay. So, if I follow you, we have um, developing economies in the global south, such as Africa or Latin America or Asia, who are gaining independence. They borrowed a lot of money because money was cheap, because oil was cheap, right? And then suddenly oil is going back up and they have a financial issue. They can't repay their debt. And the IMF and World Bank come and say, oh, by the way, we will help you if you let these interest, industrial interest and financial interest from former colonies gain back power over your economy. Is this what happened? You have this shift, like
I
decolonial,
guess like the initial debt
right?
was without the structural adjustment. It was basically, yeah, countries were taking on loans to uh, bridge the gap between whatever spending needs they have, whether that's for critical infrastructure, roads, railways, grids, etc. Bridging the gap between their spending needs and like the available tax revenues that they have in their country. And this was just sort of balance those, and like the idea is that they could pay these loans back once they've like, achieved more development within their country. And then, uh, yes, later the IMF is like, okay, we've given you these loans and we're now in this worldwide recession crisis. Um, and now we have to basically save our own economies and by imposing these uh, these structural adjustment programs on these developing nations that could no longer pay their debts because of these insane interest rates.
So,
Yeah.
what were the effects of those structural adjustment programs on the developing economies? Like, you're studying this, you're researching that. So,
Mhm.
I'm sure you have a lot of examples. Try to give us a picture.
Yeah. So yes, the real consequence of some of the things I mentioned in the beginning, and I guess I can start with, before I get into my research on this, I can start with some anecdotal experience because I was born in Cameroon right after they started structural adjustment programs in the 90s. And, you know, as I've grown up, I realized my mom was always talking about this point in time when things started like changing for the worse in terms of development in Cameroon. And I recently like started connecting some of these anecdotes to like the consequences of structural adjustment programs. And for example, I mentioned the requirements of like public bank closures before. My mom would often describe this time when there was a sudden closure of her bank, and with that, the loss of like all of her savings that were in the bank at that time. Um, I mentioned the requirements for like wage cuts. My mom at the time was working in the Ministry of Public Health for the Cameroonian government, and she describes her salary just being cut in half at that time with no reason given. She also talks about how the government used to not just invest in schools, but invest in students and actually paying people to go to school, paying for people to go to school, which all of a sudden stopped in the 90s. And it's also something I think about when I hear about how there are these like incredible infrastructure projects happening across the country that just stopped. And it's something that my mom really like laments every time we see the state of roads and infrastructure there. And I think similar and like worse stories that were happening across the country and across the global south in general. But in general, like getting into more of the like research that you do, like I said, structural adjustment programs like depressed wages and set trade terms for the global south, which is part of creating what we call unequal exchange. And this is something else that we study in our research group. And in this we calculate the total value of the appropriation of labor and resources from the global South countries to the global North. And a recent paper by my supervisor, Jason Hickel, finds that the North continues to drain the South of approximately $10 trillion every year in Northern prices. So that's just one of the monetary effects of structural adjustment programs. And then some other research has found that that structural adjustment programs, research from people not in our group, but structural adjustment programs have increased poverty by between like 4 and 6%, increase inequality, decrease health system access, etc. And for my own research, personally, I'm looking at the impact of policies, particularly structural adjustment in this case, on health and well-being, and in particular looking at the impact on lives and mortality. And my most recent research, which I'm still working on, suggests that structural adjustment programs were also responsible for 42 million deaths between 1980 and 2004. And just like bringing this back again to like where I'm from in Cameroon, this meant about 156,000 what I think are needless deaths and people who were basically sacrificed for global capitalism. So these are some of just like tidbit of the recent research on like the effects of structural adjustment programs on developing economies.
These are astonishing numbers, right? And like when you evaluate these mortality numbers, what do you consider as causes, and how do you relate them to the structural adjustment programs?
What were the causes?
Yes, like what death do you, sorry, but it's like what kind of demise do you evaluate? Like how do you like rank them by causes? I imagine you must have a very sophisticated system for that.
Well, I'm in my research, I'm not necessarily disaggregating the specific like policies of structural adjustment. It's really just a cross-sectional data set of all countries, and like structural adjustment is imposed at a certain time, and like statistically across all of these countries, how many of the what portion of mortality is attributable to these programs. But I would say, like, I don't know how I would rank like what would cause the most deaths. I think income, like the depression of wages, I think is a particularly like negative consequence of these that impacts like all aspects of people's lives. The harm to the healthcare systems and the education systems, I think those are particularly like harmful to people's lives and probably contribute the most to these like mortality numbers that I've calculated.
Thank you. So I want to just remind everyone, because a few people joined us, that you can ask questions in the chat, and I will handle the questions while Bineh is speaking, right? You can also raise your hand. I see you, right? So something I wanted to ask is who were the beneficiaries of those measures, right? Because SAP's structural adjustment programs definitely did not benefit the populations. So who profited from them?
Yeah, so I would say there's like transnational capitalists, these creditors of poor countries, and also within the global South, there are like local elites that benefited, which is also likely why we see like widening inequalities within some countries because of local elites that benefit from from these structural adjustment programs. But yeah, so like the local ruling classes would benefit through like political alignment with imperialist institutions by like their ability to like strip assets and privatize assets. And I think also like the local economies were forced in some way to like sort of deindustrialize or like stagnate in their industry, while foreign investors gained from these countries like cheap resources and labor, which is part of what we're calculating, right? These foreign investors gaining this cheap resources and labor, and um, yeah, so it's basically, I would say, transnational capitalists and creditors of the core countries.
But you also mentioned unequal exchange, which is important, I think, to understand how uh, countries in the north, in the core economies, became richer by the effect of the transfer of resource and labor, right?
Mm-hmm.
So it's not just like a few people or individuals, but the whole economy, right? The whole economy
Right,
of a country that will
right,
increase by the effect of transfer, isn't it?
right. Yeah, yeah, totally. Because yeah, it's absolutely like the effect of concentrating the wealth of these nations in the economies of the global north, and you know, the effects of that on all aspects of life in the north, from the ability to have infrastructure when countries of the global south don't.
So let's talk a little bit about debt because SAPs are very much connected to it, and try to use the word structural adjustment programs. It's a bit of a mouthful, but it's easier to follow. So SAPs are associated with debt, and they're supposed to help countries get out of debt by installing growth, right? And what you're describing is a system where countries are impoverished. So from your perspective, from the perspective you're describing and the research you're doing, it's definitely clear that the system was never intended to get people get countries out of debt. So how did they get away with it for so long? Like because it never worked, right? So the countries never got out of debt, and then they had to. So what happened after, right? So because like they start as structural adjustment plans to get countries out of debt. So maybe do you have an example of a country that went out of debt that eventually paid its debt and everything was okay, or did that even happen? Like, or is it just a fiction that because when we in the north, I mean people in the north, we are told about debt. We hear stories about like paternalizing stories. I remember the debt crisis in the 90s, and we were hearing stories from the media that countries in the South needed to learn, and that the IMF was there to educate and promote values of civilization that were going to help countries. So um, I'm just wondering how it happened that the global north was able to get away with it for so long, right? So what was the mechanism that was, or try to please describe the mechanism for which by which this happened, right? If you can. If I'm clear. I
Yeah.
don't know if I'm clear, but
Um, yeah, so I think to your first question of like, are there countries that have been able to service their debt? I'm not quite sure. I'd have to look into that more, but I know that there are countries that like were under structural adjustment at some point and are no longer under structural or stopped being under structural adjustment after a certain time. Um, and that's, but yeah, I think that doesn't necessarily mean that they were out of debt either. So like a lot of these countries were still like in this debtor relationship. Um, but I think the idea of these like international financial institutions is that like ostensibly with more loans, countries can earn more money on the global market in their like push for globalization into this capitalist system, that countries could earn more money on this market that would then allow them to develop locally and also pay back the loans. That was kind of the idea. But in reality, these new loans, additional loans, were never meant to like actually solve debt. They were just to service old debt and then sort of perpetuate this dependency. And I think a big part of that is the status of the dollar as the global reserve currency, which means that countries in the periphery in the global south must have to like earn dollars through their exports, and they often do this at a loss. And so like while the US can print dollars and pay its debts, these other countries cannot. And this kind of just creates this permanent treadmill where you have to borrow in dollars and then export real resources from your land, from your people to earn dollars. And then you're often repaying more than you borrowed. And so debt becomes this perpetual thing because it's a governance tool, not necessarily an issue of like the solvency of these nations. And further, because I mean, I mentioned that these countries are forced into like a deindustrialization, they're also then exporting raw materials, and they're forced then to import final products that are made elsewhere, which then get imported at a higher cost. Often final products that are made from like the raw materials that they exported, right? So they are forced into this like paying more than and operating at a loss in general.
Um, so if I try to summarize this again, because this is where it gets really complicated when we talk about the dollar as the international trading currency or the default trading currency. Countries get indebted in dollars, right? They borrow money and they borrow dollars.
Mhm.
They need dollars to repay their debt, but they don't have dollars natively, right? They don't have dollars at home. They don't grow
Mhm.
dollars like the same way as the Federal Reserve can print dollars if they want to, the US Federal Reserve.
Yeah.
So what they have to do is sell their own natural resource for cheap, right?
Mhm.
And because of structural adjustment plans, they already moved into an economy an extractive economy where labor is cheap and you could say not transformative, so it doesn't add a lot of value. And they sell this low value, cheap natural resource that is transformed. It gets value. It adds to the economy of the North, and then it comes back in the form of expensive goods that people like struggle to obtain. Okay, so this is a pretty much a disaster for the economy. How was it before, right? Like, was there already elements of transformative economy, or you could say added value goods being produced in the global south before structural adjustment plans?
Um, I can't speak for everywhere in the global south, but I know that there was like a lot of investment into like industries in the global south. And I know in Cameroon, my mom talked about like particular facilities that were developing like industrial level like industrial level goods for that were sold locally, and they had Cameroon coffee and stuff. They had Cameroon stuff, but now it's not like people buy coffee that even though it's grown there in Cameroon, they have to buy this like final product from elsewhere. But Cameroon grows coffee, and so it was like there was a lot of this industrial development that then kind of got cut off, um, and or stagnated in some way. And then now people are forced to buy these expensive products that are developed elsewhere, even though they're based on our raw materials there. So I think there was this progress that was happening prior to structural adjustment. Yeah.
Yeah, it reminds me of the coffee brands that we can buy here in Belgium that have a Belgian label that is familiar to us and that we like, and it's all exported, of course, from the global south. and those brands export as well back to Africa, to Cameroon and other countries in the global south, of course.
Yeah.
Um, yeah. Okay. Thank you. And then so what's okay? I think you already answered the question I had on unequal exchange, right? Can you try to summarize what data is observed and how these numbers, especially the numbers of Haeckel, are obtained? Because we are fortunate here in this master to dive into the details of these numbers, and the numbers are so staggering. So how is the method to obtain these numbers, and what do they mean in practice for the everyday life in the South, right? Because in terms of debt payment, we can look at numbers like percentage of interest that is staggering for developing countries. But the unequal transfer of wealth and resource is incredible because of the cheapening of labor and resource in the South, right? So it creates this very deep imbalance. So maybe there's a concept that I would like I would like to ask you to explain is the I think it's the word is embodied resource. Is that correct?
Mhm.
Right?
Mhm.
So what is it? Can you try to explain?
Yeah. Um, so yeah, a lot of the data, you can think of these as like um, price adjusted values of labor. And like to simplify, like embodied labor and these sort of things, you might think of like a worker in Peru can maybe be paid for 1 hour of labor, but in that hour produce goods that embody 4 hours of like German labor time when priced on the world market. Um, and okay, I can also quote one of my colleagues, Suryajito Nag. He's one of my colleagues in the project who works in Lausanne. He also talks about this, that the average, I think he explains it in a really good way, so I'm just using his framing, but the average German worker works 27 hours a week, and the average Bangladeshi worker works 50 hours a week. These are just like this is the truth. And yet, despite working considerably less, Germany is rich, right? And is able to secure for its consumers a high income, a high consumption, a high quality of life. And then meanwhile, Bangladesh, despite working more, is poor. So if we take all of the data of the commodities and the services consumed in Germany and those consumed in Bangladesh, and then map that back to the total labor measured in hours, that the numbers I just shared with you, that are required to produce them, we find that, for example, German consumers consume more than 1.5 times as much labor as Bangladesh. So, like in a way, when we're talking about consumption, we're actually talking about the consumption of like other people's time. Um, and that's kind of what this seeks to measure in some ways when we're talking about the labor. And there's also the calculation of like the unequal exchange of, of resources and of land. But basically this time is not evenly distributed. And this is partially happens due to systematically, like I said, systematically depressed wages, which happens through things like structural adjustment. Um, and yeah, so what we learned from that is that, like I said, the periphery exports raw materials or low wage manufacturing at prices below their embodied labor, this number that I just explained, and then the core exports high tech goods, final goods at prices above the embodied labor. And so we learned that this is just a not mutually beneficial trade, that is the unequal exchange. So the value flows then from the periphery to the core and is part of explaining this persistent underdevelopment of the periphery. Yeah, that's kind of, I hope that
All right,
was
that's very clear.
clear.
Thank you so much. Annie.
Hello, hi, hope you can hear and see me. Yeah, thank you so much for your input, Bineh. And I really appreciate also like bringing this kind of biographical and lived experience into the debate, to really, yeah, tell like the full story of what's happening and like and really like visualize the impacts. I was wondering like, how are the experiences that people make in their own lives, in their biographies, how are they made sense of in the like affected populations? To which degree do they know like, ah, this is because of structural adjustment programs, or also now we were talking
Mm,
about unequal exchange, like is it, well, maybe unequal exchange is a bit more abstract, but is it something that people have this like sense of awareness of? Is it like, do they use the words? Do they use other concepts? And do they like, um, what way is also like the kind of the profit making scheme behind that, and um, seeing it as, well, this happens not for our own development, but for
mhm,
other, for our underdevelopment and other people's riches. How is this like made sense of, and maybe also how is kind of this critical knowledge being repressed and obstructed in the
mhm.
countries?
Yeah. Yeah, that's a great question. I think, and again, I can only speak from my experience. Maybe other people have different experiences, but like in my family, I think this is stuff that in general we've talked about kind of nebulously like my whole life, but never within the context or of structural adjustment. And I think through my own like learning in of this and then talking to my family about this, like I think a lot of things started to like connect for them as well. But I think in general, like the average person in Cameroon, I would say, like can point to like, okay, France is exploiting us. The US, all these countries, we know we're being exploited, but we're not like aware specifically of, are most likely not aware of the term structural adjustment program, or um and they can even say like maybe that the IMF is bad or that the World Bank is bad, but nobody's like focusing on these specific tools that they're using. And I think that's what continues to drive me also to do this work, is to like make more clear like the actual mechanisms of this like neo-colonial order, you know? And I think that's totally something like, for example, my mom actually did her master's in Belgium. We were living in Cameroon, and she gets to the port in Belgium and she sees all of this wood from Cameroon, and she's like, and then she starts to question like, okay, like why is this happening? And like there was, and remembering that there was a big campaign to stop the export of all the timber in Cameroon from like wherever it was going, because a lot of people felt like it was looting the resources of the country, but they weren't tying this to um, like trade policies necessarily, right? They weren't tying this to like um, the imposition of specific policies from the World Bank, from the IMF, or whatever. Or I mean, a lot of this also was happening illicitly too. But yeah, I think that's, yeah. I don't know that everyone is super aware of the fine details, but I think that's what motivates me to keep like digging deeper on it. Yeah.
Okay, so it's a good time maybe to try to start talking about justice and restoring justice after this. So, what are the different methods proposed to repair the damage done? Where do we go from here, right? If you, yeah, please.
Yeah. I think there's various routes, but I think a main and obvious one to me is debt cancellation. Um, unconditional debt cancellations, no conditions on debt, on the non-repayment of this debt. I think another one that people talk about often is reparations and technology transfer. I think that's an important one, but I think it's a great one to think about when we actually have these numbers that are like $10 trillion of like unequal exchange. And we also, are not even calculating the historical exploitation and theft of lives through slavery and other routes, right? So like reparations is part of the answer as well, and technology transfer. There are other considerations maybe of compensation for unequal exchange, like I mentioned, in the sort of labor time accounting and ecological debt accounting, and price adjustments based on that. I think I'm just throwing out a bunch of different ideas. Ending the dollar reserve system, the dollar, the dollar pegged to everything, replacing the World Bank and the IMF. That's also a pretty straightforward solution. What would that be replaced by? Potentially like multipolar institutions that focus on servicing people's basic needs and not necessarily on this like capital drive for profit. And then my group at the Autonomous University obviously is about degrowth. You guys are in the degrowth masters. We often talk about degrowth as a solution for the overproduction and overconsumption in the North that drives ecological collapse, but it also is what drives this drain of resources from this, right? So degrowth is one of these solutions that can happen within the global North that would support ending these effects of debt on the global South. And then we also talk about this alongside the imperative for delinking, which delinking of the global South economies from global capital, from export dependence, from these international financial institutions. And so that means these countries withdrawing from the IMF and World Bank conditionalities, means building local industry, regional currencies, food and energy sovereignty locally. And obviously, in my mind, this necessarily requires strong movements of South-South solidarity. And it's only through these kinds of movements that I think we can achieve things like, if they don't just naturally cancel these debts, they can achieve things like collective default on debt. And we can reclaim the value of our labor and our resources and develop countries for our own well-being rather than like the well-being of this neoliberal economic order, right? So those are kind of the methods I would say that we could think about moving forward.
Wow, thank you. You mentioned all the ideas that I was hoping we get to, and there are so many, right? So many brilliant ideas there. Let's explore a little bit. Let's talk a bit more about delinking and articulating that with degrowth, right? When we talk about degrowth in the master and in general, in like from my perspective here in Belgium and Europe and the North, we talk about degrowing consumption in the North and slowing things down to preserve resources. How is degrowth perceived in the global South, in a country like Cameroon? Is it a priority versus delinking? So, what are the differences?
Yeah, I mean, I would say that degrowth is not a consideration in most of the global South. I think if talking to people in the global South, most people want development. and development to them means growth, economic growth in a lot of ways. And I think that is necessary in a lot of these places. So people need access to basic needs, and part of that includes like growing the economy, but that can't be the only goal of the economy as it is in the rest of this like global hegemony of capitalism, right? Like the goal can't just be growth; it has to be like meeting people's basic needs. And so I think, I mean, like, you know, if I was working with the government, Global South government, I would talk to them about degrowth. I would I would say like we need to focus more on delinking than degrowth. And yeah, so that's why I think we always talk about degrowth as a project of the global north. Yeah.
So the process of delinking for let's say Africa, right? Because we can narrow things down, and because it's a bit difficult to talk about very big concepts like global north, global south. If we just talk about Europe and Africa, right? So we are in familiar territory. Delinking Africa from Europe would essentially involve degrowing the economy of Europe. So they are parallel processes, right? So we could consider this as the same project from a different perspective.
Yeah, I mean, I would definitely say so. I think delinking is yeah, these are parallel processes. Delinking is kind of a what's the word? Like an acknowledgement in some way that like our resources are, I mean, all of these are parallel processes, like all of the export and trade that has built the North, that was a parallel process to the underdevelopment of the South, right? Like how Europe underdeveloped Africa. These are always like parallel processes. So I think it's basically trying to make that go in the other direction, right? And towards we also, one of our goals is to talk about scenarios for convergence and convergence of the economies of the North and the South, the well-being of economies in the North and the South, of people in the North and the South. So yeah, convergence, I think, is like how these things, how we see the end goal of this parallel process.
Let's talk about scenarios, because that will be, I suppose, very interesting for our listeners, for our audience here. What are the different scenarios that you are exploring at the Real Project in terms of how this could happen in the future? Because you are modeling political decisions economically, right? So you are observing how economy could evolve based on different political decisions at a certain point, and how things could evolve. So tell us a bit more about that, like what kind of hypothesis you're exploring.
Hmm. Um, so yeah, we have a quite large project, and we all work on very different things. And like in a little corner of the project, looking at well-being and scenarios for achieving well-being under degrowth policy. So like, for example, I'm pretty early in my research on this, but I've been looking at in the global north, like the effect of a potential, or not necessarily just the global north, but like the effect of a job guarantee program, which is part of uh, our policy package for degrowth. Is like one of the employment policies is a job guarantee, and the idea behind this job guarantee program is that it both uh, has guaranteed employment, and the whatever nation it is can direct that employment towards socially and ecologically beneficial things. So maybe we have people who are devoted to clean energy or other green industrial policy projects in that nation, right? So my work is this scenario of like, okay, what if a country had a job guarantee program? How does that then impact um, employment? How does that actually impact employment? How does that impact other things like housing? How does it impact income? How does it impact? And then if it has this aspect that is like um, about about like the green industrial policy, how does it impact the environment? And how does that then, how do all of these things together contribute to a different well-being under like our current policies that allow for unemployment at whatever levels, Um, so that's one of my projects right now is like trying to assess the potential for well-being under this.
Can you explain a bit more? Because like unemployment, staggering inflation, cost of living in the north, that's definitely going to be a big issue. What is this job guarantee you're talking about? Is it the same as, does it mean that everyone gets a job, no matter what? Is it like how does it function?
Yeah, so it's basically the government. Yes, whoever needs a job can have a job under a job guarantee program. It doesn't mean that you can't have like other jobs. It's just like if you need a job, there's plenty of public works that could benefit people's lives that the government would then provide, right? And we, my research is like has also looked at there's not many there's not a ton of instances of this in the past, but there have been instances of job guarantee programs. For example, after the Great Depression in the US, there's the Green New Deal programs, which were essentially a job guarantee program. And, we are able to, uh, I think the interesting thing to me is like, we can do things in that situation of economic crisis. We've done similar. Britain, for example, did similar things during the war of directing people to jobs that would support the war effort. And so I think it's a matter of priorities, and it's us trying to get governments to change their priorities to people's well-being rather than like war, right? Because they were able to do this in the context of war, but not able to do this in the context of climate crisis and in the context of people's livelihoods being at stake. So, yeah.
So we have historical examples of a job guarantee in the context of war and economic crisis post 1929 crash in the US. And so the degrowth idea would be, let's try this for climate change and give people jobs that are useful for well-being as opposed to increasing capital, right?
Yes, yeah, exactly.
Wow, that sounds really nice. So how does it look like in the data when you make projections? Like, do you have any early pointers for us? Like, what seems to be the best conditions for something like this?
Hmm. So again, yeah, very early stages, but I so far have just kind of tried to collate all the instances of job guarantee programs around the world that I could find and look at their impacts on unemployment, And I guess one like finding, I guess, is that like per percentage of GDP spent on a job guarantee program, countries were able to increase employment by or like yeah, increase the share of employed people from the unemployment pool by like 9%. So each year. So I think using that as like a sort of effect size of a job guarantee program, I'm trying to then look at the impact of like employment on well-being, the share of like a population that is employed, how does that impact the general well-being of the society, still working on that aspect of the model, but yeah, that's kind of the focus of my work right now.
Very good, very good. So we are heading to an end. Thank you so much, Bineh, for all these insights. I'm sure we could continue for a very long time. I'm just going to keep the recording to within the hour. Any last questions from anyone before we close up? No one? Okay, so in that case, I will close it there. Bineh, good luck. I hope the research goes well. Thank you so much for answering our questions.
Yeah, of course. Thank you so much. Thanks for having me.
All right. So bye, everyone. And